Whoever sells wrong.
I'm Charlie. Welcome to Moving Home with Charlie, and thank you for coming.
Charlie Lambden grew up in Sussex, is the founder of Best Agent and presenter of Moving Home with Charlie.
If you want to find one of these guys, look out for those compassionate professionals. All estate agents are not the same.
So Charlie, what would be your advice for people interested in buying new builds right now?
Don't overpay. Do buy, but don't overpay. That's why I say disregard the guff. Read into the numbers and look, and it's buried. The bad news is buried in the small print, okay?
Good evening, everyone. Welcome to the Property Press Awards.
They may or may not be telling the truth, but you should form your own view. Get out and view, get out and view, get out and view. You cannot be in a position to make offers and have the offers accepted if you're not viewing. Just be out there viewing. Pay attention to the back of the class. If you've not been watching my videos, I did one just a couple of days ago. Disregard the guff, guys. Good evening, everybody. Welcome to another live stream. I'm Charlie Lambden. This is Moving Home with Charlie, the channel where I try and share my 25 years of insights from behind the scenes of the estate agency business with movers who want to know the truth about what's happening in the market and want to part the clouds of guff coming out of the vested interest lobby in the property market and the investors. Tonight's going to be a very relaxed, fun one. I've got Housing Stig. He's in the wings. He's waiting in the wings right now. It's his birthday today, so you might want to wish him happy birthday. He's been celebrating a little bit, but I'm assured that he is not sober. So he is sober. Yes, have wine. I'm sober. So let's see how this goes. Now I don't know. I got a funny feeling it's going to be a fun one tonight. So I'm really glad you guys are here with me. I'm just going to adjust that camera slightly. Now, yes, the Bank of England increased base rates today from 4.25% to 4.5%, and we'll come on to that in a minute. That's what I'm going to really discuss with Alex. Before we do that, the other thing that happened today was also the RICS released. It wasn't today, actually. It was actually, I don't know how I missed it. It was a couple of days ago, and didn't really get reported on, which was really bizarre. Anyway, let me just quickly run through the key points from the RICS thing. Monthly. Okay, really important thing to understand. The RICS monthly surveyor sentiment survey. It is actually a survey of their surveyors. Is in my book the most useful monthly housing market report of all. Why? Because it is a survey that's sent round to all of these qualified chartered surveyors who are doing valuations on a daily basis. So it is very much regional, and we'll see the regional breakdown in a minute. It is what they're seeing at the coalface today. They report on the most recent month, the recent 3 months, and the coming 3 months and the coming 12 months. Obviously, what they're saying the next 3 to 12 months is what they're feeling. It's not fact, it's what they're expecting. But it has been proven over time to be the most, let me rephrase that, the least unreliable housing market indicator. It's the most accurate leading indicator of what house prices are going to do. I want you to remember that, okay? So if you are fed up with the Rightmove and the Zoopla and the Nationwide and the Halifax and go, oh, I can't get my head around the timings, asking prices versus mortgage approval prices versus land registry. If you were only to pick one survey, this is the one I would recommend that you look at. Now, I think I've linked to it below, but if I haven't, I'm sorry, I can't remember. You can just Google RICS Housing Market Survey, and number one result there will take you to the page where you can click on the PDF and see what I'm about to show you on screen. It's, in my view, it's the least guff that comes out of the industry, this particular survey. Okay, let's crack into it. Right. I've just cut straight to the chase on a couple of these points. Okay, so first of all, out of the commentary at the beginning, it says going forward, near-term house price expectations are signalling further falls over the next few months across the UK in aggregate, posting a net balance of -48 versus -47 previously. So that actually means that the expectations on prices in the near term is marginally lower than it was last month. Okay, now this does not mean house prices are going to fall 47%. This is the balance of positive versus negative, of how many are expecting prices to increase versus. It's very simple. It's like, in the next month in your area, do you think prices are going to go up or down? And they just say up or down. That's it. And this is the balance of respondents. They don't say how far up or down, but it shows you the overall result of that survey. Now, let's just go to a couple of the key graphs that I think are worth looking at. So we'll ignore the past 3 months. New buyer inquiries in the past month. This one's worth looking at. So this one on the right-hand side of the screen here, regional new buyer inquiries in the past month. Because if you compare the blue bar with the purple bar with a little blue dot, the blue dot is the 3-month average, and the bar is the current month, and that's what's just happened in the most recent month. So what that tells you, for example, here in the West Midlands, that is telling you that in the current month, the number of new buyer inquiries is significantly lower than the 3-month average. So that means that's got worse in the West Midlands. And in fact, the only region on this graph where it hasn't got worse is Northern Ireland, where in the past month, new buyer, it's only slightly positive. It's quite close to the neutral, but it's showing that the Northern Ireland market is actually a slight increase in new buyer inquiries. But everywhere else is a decrease. The Northwest, though, is showing 0, so not positive or negative on new buyer inquiries, but an improvement over the last 3-month average. Okay. And that graph on the left, okay, so these two graphs are not forecasts. They are reporting what's happened most recently. And so what you're seeing down here, if you can see that, I don't even see my mouse moving there, is that actually it's dropped a little bit. It's still quite strongly negative in terms of inquiries in the past month. I'm going to skip past my instructions. Guys, go and take a look at this for yourself if you want to get it, because you want to go and have a look at wherever your region is. Now, okay, that's sales volumes. I'm going to skip past that and go to price expectations next 3 months. So that's this graph on the right here. I never know whether you're actually seeing what I'm seeing. You are good. Okay, this is good. Just double checking everyone can see what I'm doing. Right, regional price expectations in the next 3 months. So this is probably the single most interesting graph on there if you are a buyer or a seller, actually, because it's what they're expecting to happen to prices. So everywhere in the country except for the north. Let's see if I can just really zoom in on this and get it big on the screen for you. And just get there. There we are. Hopefully you can see that. So everywhere on here except for the north, there's a strong negative expectation on price expectations in the next 3 months. So that's the regional. Again, the only places that are positive are Northern Ireland. And again, that's a more positive expectation than is reported in the average of the last 3 months. And the north, which is at a very big jump from what was a negative 25% balance in the average of the last 3 months to positive about 4%. That's a really very, very slight positive. But they are saying that the surveyors in the north, not the northwest, but the north, are actually on balance just expecting slight price increases in the north. But everywhere else is very strongly negative, isn't it? The northwest is not quite as negative as everywhere else, and neither is Scotland. Scotland is also slightly negative, but not very. But the East Midlands, West Midlands, Yorkshire and Humber, Southwest Wales, and the Southeast. So the Southeast and the West Midlands have got the strongest negative expectation on price falls in the next 3 months. All right. So, guys, there's a lot more detail I could go into that, but I just wanted to touch on that because I honestly think that of all of them is the most useful monthly house price index that's coming. Now, I want to put a question out to you guys on the topic of house price indices. So one of my jobs at the moment, on my day job, which is running Best Agent, is I am designing. Am I sharing with you the right thing? I am. Yes, cool. I am designing a new monthly house price index that I'm hoping will become used by the media, by agents, by movers as the most useful or the least useless of the guff-filled house price indices. And I won't spend long on this, but and actually, Alex, I'm going to bring you in. Just keep quiet until I said what I said, and then react to it. If that's okay. So just hurry up and get this. Hi, Alex, you there? Can you hear me?
I can hear you.
Cool. Happy birthday, by the way. Happy birthday, you old man.
I am an old bastard. And just very quickly, thank you to all of your audience for your birthday wishes. That's very kind of you. And David, happy birthday for tomorrow.
I told you not to talk till I finished.
I don't give a fuck.
Okay, he's not sober. Right, never mind. I know you don't, and that's why I love you, Alex, because you don't. You and I have that in common. Now, what I want to ask you guys is this: I want to come up with a monthly house price index that has something completely different from all of the other indices, and something that I think is very useful to people moving and to agents. And it is this. Let me explain it thus. Where is my page? Those two horizontal lines that you can see are, the top line is 100% of all homes. By the way, we strip out garages, land, sheds, porter cabins. Those are not all fish and chip shops, which you find on Rightmove. Those are stripped out, but they're all of the available homes for sale we can find in the whole of England and Wales. This is just England, in fact, right? Because we break it down between England and Wales. So that's 268,993 homes currently showing as for sale, not under offer, just for sale. Now, the median price and the average price, these are the asking prices of all homes currently showing for sale in England, okay? Look at the colossal difference between the average price, which I think is meaningless. Technically speaking, that's the mean price, right? 430,000. The median is 320,000 in England. Now, the key price that I want to become as the primary number in the monthly Best Agent House Price Index is the median asking price of sold properties. That doesn't mean this is the median price that they're selling for. It is the median published asking price that was advertised at the point that they were showing as this property's gone under offer or sold subject to contract or sold, okay? And again, look at the colossal difference between the median and the average, all right? Now, briefly, I want to explain the two things I'm trying to point out here. If we ignore the top line, what we're doing is we're ignoring all of the unrealistic asking prices of properties that don't sell. Because the asking price of properties that don't sell is a meaningless number. A meaningless number. Because you could ask any price for a property if it doesn't sell. It has absolutely no bearing on what is happening in the property market at any point if it's just stuff sitting on there not sold. Now, that's point number one. Point number two, between the average and the median, without explaining too much about the difference in how they're calculated. The average price is very sensitive to outliers. Very expensive properties or very cheap properties can distort the average, okay? Whereas the median price is not sensitive to outlying properties. Am I correct, Alex?
Correct.
Thank you. Just want to double check. So for that reason, I think that this price here, the £280,000 price, the median price, let me be very clear, the median asking price of properties marked as sold in the whole of England, that's all of them, right? That is the median asking price of all 84,325 homes currently showing as sold or sold subject to contract or under offer. And guess what, boys and girls? That is only £7,000 out from the UK Land Registry's average price.
Yeah,
Now,
you're going to get a very accurate number this way.
Sorry, I am.
Yeah, you will. You will.
And so it is I've been spending a lot of time thinking about this because once I launch it, I don't want to have to start changing it around. I want it to be consistent and everyone to know that when this figure comes out every month, that's what actually matters. And I just think that is the most. That's including London and the whole of England. Okay, so you can read it. London will be higher, of course. I mean, we do have the data to break it down by region, by county, and by London borough. And in time we can do that. But I want to start off with a headline figure that we can publish every month. Now, the second metric, and Alex, I haven't asked you this, so this has come out of the blue for you, that I think is because I asked myself, what is the single most easy to understand and compelling metric or measure that tells you the state of the market? And it's a really simple one. It is the ratio of unsold homes to sold homes. It's really simple. So right now, roughly 3 times as many sold homes as there are, 3 times as many unsold as there are sold. So very, very roughly there, that's a 3-to-1 ratio of unsold to sold. Now, 2 years ago, that would have been the other way around. It would have been 1-to-3 when everything was selling and you just couldn't find properties that were for sale. And so to just have a single number there, that's just a ratio that shows you the ratio of unsold to sold, I think is a really simple. And if we can track the movement in that number month on month, that tells you the direction. Is the market going more of a seller's market or more of a buyer's market? Yeah, more of a seller's, more of a... So, Alex, can I ask you first of all? And please, guys, tell me in the comments what you think. What do you think, Alex, of those two simple metrics? I mean, by the way, same for Wales. So there's England and there's Wales. We could, of course, combine them if we want to. But what do you think? What's your slightly not sober opinion on that?
Okay. Well, there's two things. The first one, one of your viewers has commented on this, and it's absolutely correct. The reason there's such a disparity between median and average is because it's covering the entire country. Once you break it down by area, those numbers should come closer and closer together, because obviously London, for instance, is a very different market to the Midlands.
Yeah.
So as you break that down, that's going to be a really useful metric. And as you say, the sold median price for a given area, or indeed the country, should come very close to what Land Registry actually register as the final sold price, as a paid price. So that'll be great. In terms of your balance of ratio, I would see it more like, not a compass, because obviously that has 4 points, but almost like one of those meters in black and red, where it literally just a swingometer, just as they do for the, and then you can see in one thing, are prices going up, or is the ratio showing that in fact the market is a buyer's market, or is it moving towards a seller's market? And then somebody could look at that page, and in a second they would get an idea as to A, how much things are worth, and B, whether as a buyer or seller they're in a better position.
Yeah.
Sounds good to me, Charlie, because you're never going to get quicker stats because we are dependent on waiting for the Land Registry. This is as quick and as accurate as you can get it.
Well, I'd like to think so. I do like to think so, because what I don't want to do is to shoot my bolt too soon, so to speak.
You need more red wine.
Right. Yeah. Let's not go there. And I just want to put something out there where I can publish it, and I can say to the journalists, and I can say to all the viewers of this channel and all the agents watching, go, there it is without the guff. And just not even give any commentary. No headline commentary, like numbers, just plain numbers. Median sold price, swingometer, buyers or sellers market. And leave it at that. Like just, and then everyone else can talk all the guff they want, but this is simply a different processing of all the public data that's out there. I would love, I'd love to see. Actually, I can't read the comments; they're just whizzing past too fast. Anyway, that was that. I didn't want to spend long on that, but I would love your feedback, guys. By the way, if you don't follow me on Twitter, please do follow me on Twitter, because Twitter is where I do the most sort of up to date on a daily basis. I do post and engage on Twitter with people, with my followers on Twitter. So it's moving_Charlie. I thought I had it in my thing there, but I don't. It's moving_Charlie. And just before Alex and I get into a debate about, not a debate, a sort of a discussion, a reaction.
Go on, let's have a debate.
The other thing I wanted to mention to everybody, because it's hot off the press today, I'm just going to stop showing that, is that as of today, what went live on the website is a page called mhwc.co.uk/all-my-ducks. That's the actual URL. I've got to put it on screen. Hang on a second. I've got to put it on screen so you can see. And I'll explain it, because I'm excited about this. All my ducks. Okay, save, and there it is. There it is on the screen. Okay, because as of today, I've now got a single page where, if you haven't found your own independent mortgage broker or conveyancer or search pack provider, and you haven't got the time and you can't be bothered, and you just want one place where you can get all three in one go, that's the page where you get all your ducks in a row. And you can pop your stuff in there, and I will put you in touch with the mortgage brokers and the conveyancers instantly. They will contact you for a free, no obligation conversation with them, and you can decide if you like them or not. And they'll give you a quote and stuff like that. And where you can also then actually order your search pack. And thank you to those of you who have been ordering the search packs. That's very cool. Again, for people who don't know, ordering search packs the day you have your offer accepted massively speeds up the process and improves the chance of your deal going through. So I wanted to announce that. Take a look at the page, give me feedback. It's there in case you don't have the time or the inclination to go and find your own. But I would always say, do your own research first. See if you can find your own mortgage broker first. See if you can find your own conveyancer first. But if you can't, or you can't be bothered, I've got your back. All my ducks. Let's go and get them in a row. Now, let's go to the Bank of England. The Bank of England, and let's share this tab instead. I watched some of the video, the live press conference.
They are a bunch of bankers, Charlie.
So let me prime you, and then I'm going to shut up and let you go. And release you, because I'm going to release the Stig, right? It's the biggest upgrade to an economic forecast in the Bank of England's history. Point number one. Point number two, they're saying that it's going to be 2 years until they get inflation under control to their target of 2%. That's 2025, boys and girls. And just having listened to a lot of that conference that they had, the feeling I get is a little bit of headless chickens, not because it's that they don't know what they're doing, but I think they're being pulled in a lot of different directions behind the scenes. I honestly, I sense not panic, but I sense deep discomfort at the Bank of England, a lack of confidence. Because one of the comments he made, when I was watching the video, was, all of my statements about the future are conditional. They are conditional upon this, or they're conditional upon that. In other words, you cannot pin me to the wall on anything. And so it's really, what I did point, and the reason I got this up on the screen, this particular point, is that the one thing I picked out here, and I wasn't sure if I interpreted this correctly, Alex, which is the committee's updated projections for activity and inflation are set out in the accompanying May monetary policy report. They are conditioned on a market-implied path for bank rate that peaks at around 4.75% in Q4 of this year, before ending the forecast period at just over 3.5%. Am I right that what they're saying is, we're basically saying, we're acknowledging that the market is expecting a peak of 4.75%? Is that right?
Yes.
Okay.
Although the market, I haven't looked at the latest bonds, but the Bank of England is certainly thinking that they will put in another raise.
Yes. Yeah. I mean, they are expecting. They're saying that when the inflation figure comes out in 2 weeks' time for April,
Yep.
that it'll be dropping to somewhere between 7 and 8%. Because
that seems unlikely.
well, I mean, they're saying that they seemed really confident about that. Because they're saying, it's the 12-month thing, and the big spike in prices will then will drop out of the beginning of the 12-month measurement period, and therefore that's what they were saying. I have to say, my gut feel is the same. It's like I think that they have been consistently caught out by how high inflation has stayed, which suggests to me that they don't have a handle on the true input factors.
No, look. I've said a number of times, when inflation starts to fall, it will fall very fast, and it will catapult us straight into a massive recession, and that's going to be horrendous. That's when the worst things happen. But I don't think it's going to happen right now. I'm expecting a fall. I mean, it may be between 8 and 9%, but 7%, for it to have fallen that much in this time, it seems unlikely. Historically, inflation always falls fast, just as it rises fast. It's not like a right skewed sort of distribution. There's not a long tail on it. When it comes down because they've crushed it in whichever way. And the problem then is that you tend to head into a full blown recession, especially when you've got no productivity. I mean, you can grow your way out of it potentially, but I can't see anything in our near future that suggests that suddenly the UK has become a powerhouse of production with great GDP figures.
No.
So therefore, the way we're going is straight into a terrible recession. But will it be this month? I don't think so. Next month, maybe. But 7 to 8% seems very optimistic.
So straight into a terrible recession, which is, for a long time you've been saying it's going to happen at some point, but you weren't very specific about when. But this is the relevance to people who are moving house, is that when you're basing your moving decisions on your job security, your financial security, etc., especially if you're someone who hasn't in your adult life lived through a bad recession, it's a bizarre thing to experience if you've never experienced it before. It's difficult to imagine. A bit like how the economists and analysts have found it difficult to imagine. This time last year, if you said Bank of England base rate get above 4%, you'd have been laughed out of the room.
People did laugh at me on Twitter.
Yeah, they did. and if you said that inflation would still be above 10% in March next, if you said it, they'd have laughed.
Yeah.
The markets and economists have all got it wrong consistently. What does that tell us? It doesn't tell us that they're shit at their jobs. I'm not having a dig at them. I'm saying we're going through a period of turmoil and volatility in the markets, which makes it incredibly difficult to predict anything like this, other than the way you and I do it, which is pure talent.
No, Charlie, I'm sorry. We had this conversation earlier, and you said, well, maybe it's not, maybe they're not stupid, maybe it's ignorance. And as we discussed, this is their fucking jobs. They are professionals. I normally make a distinction between ignorance and a lack of intelligence. Ignorance is simply not being exposed to something enough to understand it. And you have to forgive ignorance. There's lots of subjects that people don't know. But if this is your job, and it is theirs, and you are intelligent, you cannot consistently be as wrong as they have been. And that speech today was just utter guff, for want of a better word. Yeah. All of this, we're not going to have a recession.
It's arse-covering.
5% pay rise. I mean, it'll be fine, you guys. Not only that, GDP, 2.5% growth. I mean, that's what we had back in the 70s and 80s and 90s before the dot-com crash that then slowed everything down. I mean, what are these people smoking? And if I'd like some, although it probably wouldn't go with my red wine. But, it's not forgivable. I'm sorry. This has pissed me off now.
Right. Okay. I've got a question for you here. Aaron Hughes, question for you. Do you think we will see deflation in the future?
Yeah, it's a distinct possibility. I mean, I never thought I'd be saying that, but yeah.
And just for newcomers, beginners, just what is deflation and what causes it?
Well, inflation is where everything, including assets, get more expensive, and there's this nice big bubble. Deflation is exactly the other way around, where Japan, for instance, went through a period of deflation where houses simply lost money month on month and year on year for a considerable period of time. It's not something that you want, really.
If you own a house, but if you don't own a house,
Oh, well, yeah. Yes, your buying power, depending on your salary, of course, your buying power suddenly becomes greatly increased.
so okay, what would you say to Nick Jones? Is that deflation can't exist due to QE?
Well, he's not wrong. I mean, we've got a lot of stuff sloshing around there, but oh, they've been talking about quantitative tightening for ages, and then every time they start to try and do it, they have to print more cash. But the amounts that they get rid of or that they destroy are tiny in comparison with the vast amount that exists, and more importantly, the vast debt that exists. And I go back to, just as we are likely to be unable, sorry, we are not going to be able, let's be definite about it, to grow our way out of this inflation in terms of avoiding a recession. At least I don't believe it. And the main reason for that is that we've got so much debt that servicing that debt stops us investing and actually being productive, because a lot of the money is being tied up just servicing the bloody debt.
The point, it's like you're literally working to pay. The country is just working to pay interest.
Yeah, exactly.
So you're working, and whatever you're producing collectively as a country to work is just going to pay down debt.
Yeah,
it is staggering.
And if you're doing that, you're not having real growth. You're not seeing real GDP increases per capita, and therefore, given that wages are not going to keep pace with inflation at the moment, where we're going, it seems to me to be inevitably a mammoth recession.
Yeah, and so let's just assume. Did you hear anything in what you read or watched today from the Bank of England that explained their rationale as to why they've given the biggest economic forecast upgrade in their history?
No. Maybe one of your audience members has a clue, because as I put on, I posted on Twitter shortly afterwards, I simply don't understand what I heard, and I can't see any reason for it. We had 700,000 mortgage and rental defaults last month. Now, the problem is the papers blew that up as being a huge thing. It's not a huge thing. It's more than last year and the year before. But 700,000 is not horrendous going by past years, but it's high.
Yeah.
But more importantly, credit card spending has gone up. We know that there are between 1.4 million and 4 million households, 1.4 million fixed rate, and the remainder on trackers or variable rates or however. But there are up to 4 million households that are going to be impacted by increases in interest rates on their mortgages. Real wages are shrinking.
Yeah.
How is any of this pointing to not just a soft landing, but not a recession and GDP growth? Yeah. What the fuck is going to happen? A magic money tree is going to suddenly rock up in the center of, maybe we should go to Camelot and just hang around. The knights will come back and it'll all be great. King Arthur will ride again.
Alex Pitcher's got a technical term to describe the situation we're in here. It's on screen now. I think you agree with that technical definition, don't you?
Oh, entirely. Yeah, FUBAR, fucked up beyond all recognition. Yeah. And if you haven't watched Tango and Cash, fantastic movie.
Yes, it is a good film. Tango and Cash, proper 80s shoot 'em up.
Oh yeah, you need wine for that as well.
Yeah. There was another question that was a good one, I thought. But yeah, does anyone watching have even a theory or an opinion as to why the Bank of England have upgraded their economic forecast? What's their rationale that you understood? Because Alex said he listened and couldn't understand it. I don't understand it. I agree. There is no as a country, there are no sectors that are that are positively growing or due to grow. The one sector we had, which is really high tech, advanced stuff, the government's dropped the ball with that, which is the graphene based superconductors and stuff like that. The only sector that's growing is aviation, which is great because I'm an aviation fan.
And shortly nuclear, I fucking hope. They've been putting that off for ages. You've seen Bill Gates is getting in on the act there.
Yes.
Which is fine because they're going to pick two companies, hopefully, and one of them will be Rolls-Royce. And also life sciences are still growth, Charlie. We've still got some big virology labs, and we got lots of research into both medical devices, creation of, and also T-cell therapies, monoclonal antibodies.
What sort of portion of the economy do they make up?
Well, a growing portion, but tiny in comparison with what we need.
Yeah, exactly. My point is, in terms of the mainstream contributing industries to the economy, that there are none of the big ones are growing. They're all in contraction. Or car production is struggling. It's not good. Now, listen, someone's asked a question. Is someone B says, 10 years time, where do you think the country will be? Still buggered or green shoots of hope emerging? And I'd like to comment on this first, Alex, and then ask you what you think about this. Right?
Go for it.
I did a video a couple of days ago that some of you may have seen, where someone said to me, Charlie, I think I'm going to have my offer accepted. I've offered 25,000 below asking price, and the agent said they're going to accept it. But I'm now worried that I'm overpaying because I don't think I'm going to need to move in the next 3 to 5 years. But if I end up having a family, that I'm meeting someone, that I might. I'm not that sure of my plans. And my biggest worry, and one of the reasons I started banging the drum about house price falls, is because I want to help people avoid negative equity. Because even if you don't lose your home and end up with the difference that you owe the bank saddled around your neck until you've paid it off, which is the worst case scenario, negative equity can really ruin your life, even if you don't lose your home, because you need to move and you can't. Right? It can destroy relationships. It can destroy families. It can destroy careers. It can derail stuff, genuinely. So all those people who say negative equity doesn't matter, I'm sorry, bollocks. It does matter, because you might be lucky and you might be someone that goes, actually, I'm never going to need to move again. And if you are absolutely certain that you're never going to need to move again, and you buy something now and you know it might be negative equity for a while, even for a long time, you're like, I don't care. I will be able to pay my mortgage off. I'm never going to need to move. Then fine. In that particular scenario, and only that scenario, you could say that negative equity doesn't matter. But for everybody else, what it means is your life choices are strangled, right? Yeah. If you want to move and you can't, don't tell me it doesn't matter. If you're a couple and you've bought, and one of you gets your job, maybe you get relocated, maybe your family grows, maybe something you didn't know happens, maybe someone in your family gets very seriously ill, you need to move to be near them, whatever it might be, and you need to move and you can't. That is, never mind the finances of it, that is a disastrous situation to be in. And that's the reason I keep on saying, watch out, because I think house prices are going to come down a long way further, right? I could be wrong. And guys, all of you who disagree with me can shout and laugh and poke and cajole. If I'm wrong, I'm wrong. I'll be fine. Hey, I was wrong. It didn't matter, right? But this is why it matters to me. And so when you ask questions like 10 years time, where do you think the country will be? That is the question that you need to be asking yourself before you commit to a high loan to value mortgage. Like, I mean, talk about 100% mortgages being a bad idea at this particular time. Yes, there are some people who benefited from taking a 100% mortgage if it was at the right time. Not everyone is it bad for, but it is very risky. Now, if you're the kind of person who goes, I'm okay with that risk, because if I take a 100% mortgage and I lose my job, I'll just go bankrupt and walk away. You can do that, right? If you don't care about going bankrupt because you don't have any other assets, you're just a tenant now with no real assets anyway, and you get a 100% mortgage and you buy a home and you live in it, you're rolling the dice because, hey, it might work out. And if house prices go up and you keep your job, you'll end up owning a property. But it's a roll of the dice. That's the point. That's the point. Yeah. It's a roll of the dice. So, Alex, 10 years time. Now, I know what you're going to say.
Does it begin with C, B, D, and C?
No.
Oh,
DIP.
DIP.
Death in poverty.
Oh,
So,
yeah,
hang on. Sorry. What I'd like you to do is to pretend that you've never answered this question before. Okay. 10 years' time, where do you think the country will be? Still buggered or green shoots of hope emerging? So never mind about CBDCs, that kind of stuff. Just where do you see the country in terms of its prosperity?
There will, as always, be a very small percentage of very wealthy people living in very nice houses. The vast majority of the country, the populace, will be much more regulated. In many respects, there will be more equality between everyone who is left, in that everyone will have a lower standard of living.
It's not funny.
It's not. It's not.
But
But
you phrase it.
I mean, I'm sitting here looking on my screen at the moment. I'm looking at the NHS waiting list, which has increased from 4.4 million in February of 2020 to 7.21 million now. That is 2.81 million more people on the waiting list, and that number is only going up. And I think in 10 years' time, we will have to be paying for part of our healthcare privately. I think that salaries will not have increased in the way that people certainly saw from the mid 90s through until the mid 2000s. I think that home ownership will be less and less prevalent, and that there will be large institutions who own the houses, and we will mostly be a nation of renters. I think that we will be regulated in our currency, which will be digital. And we will have spending limits and spending timescales where money has to be spent in order to keep the economy stable. And I think life will be a very different proposition. Now, not all of that will come true in 10 years, but that's the path that we will be on in 10 years. So, no, I'm not particularly hopeful at this point that things will be happy. And one of the things that just tells me that is COVID, even the WHO came out and said, well, COVID's over now. Well, COVID technically in this country has really been over for quite some time. But the number of people who are now on long-term sick or caring for sick is exactly double what it was in December of 19. It was 650,000. It is now 1.3 million people. In terms of people on universal credit who are working, so these are people who have a job, but they can't afford to live because the cost of living is so expensive. That has increased from 820,000 to 2 million. So it's an increase of 1.2 million people. In total, the number of people on universal credit has increased by 3.2 million people. And bear in mind, this is only people between 18 and 65. So this is about 40 odd million people. So we've added around about 8% on top of the 6% that were already there in the first place. Roughly 14% of all adults in this country are on universal credit, which is where you start looking at, well, surely they'll introduce a universal basic income, because otherwise pensioners who in 20 years' time will still have mortgages at the age of 75 because they're taking out 40-year 100% mortgages, they're not going to be able to pay them. So without a basic income, they're going to die in the streets. You know, are we going to become a third world country?
Right. Thank you. Now,
is that happy enough for my birthday? Because that was my happy birthday speech.
Now, we've got a follower called Kezia Noble, who on a couple of our live streams has actually been banging a drum saying people won't stop spending because they can't, and there's still access to cheap credit.
Credit crunch is coming. The banks are going to stop lending.
I'm picking this up because Kezia is saying demand for everything is so high. That's why inflation is high, because demand is high. Now, that I think is a factually incorrect statement. Inflation has nothing to do with demand, number one, right? It's partly to do with demand, but we had lots of high demand for years and inflation wasn't high. Then she says, and I'll put it on screen here, people refuse to tighten their purse strings. Well, I agree with that to an extent. I said this to you earlier on the phone, Alex. Like
Yeah.
people who've got a current standard of living, and this is actually very sad, especially if you've got families and you've got kids and expectations. You know, you'll keep on spending the money. You'll start to filling up the current credit card. You'll start using. You
Yeah.
won't voluntarily give up your lifestyle. Most people won't. And in that sense, I do agree with Kezia that people refuse to tighten their purse strings.
Right
Not
up
everyone.
until the point they stop eating.
Right. And this is the point that I don't think Kezia understands. That point's coming because the furlough money, as you said, about 1 more month or 2 more months until the furlough excess money is gone.
Yeah, July.
And credit cards are maxed out.
Mhm.
And credit cards are not cheap credit, by the way, Kezia. They're really not. So Kezia, what I'd like to know is, because you've been banging this drum very hard in the comments in the last couple of videos, why is it that you think people are just going to keep on spending without change indefinitely, and that's going to stop a recession? That's what I'd like to know. That's right. She said people still have access to cheap credit, and there's still a lot of money sloshing about. That's a technically incorrect. A lot of money sloshing about. Well, we can see, can't we? I mean, the Bank of England actually publishes exactly how much money is sloshing about, and you can see the graph. And in the most recent month, there was this very sudden and massive reduction. All the different kinds of money. There's M4 money and stuff they were talking about.
Yeah.
So what's your reaction to that comment there? People still have access to cheap credit, and there's still a lot of money sloshing about.
For a certain subset of the population, that's true. But most people in this country are not rich. 18% of the people in this country have less than £8,000 in wealth. That's adults, not all people. That is people over the age of 18. 18% of them have less than £8,000 of, if they sold all their assets, everything in their name, less than £8,000. Over 40% of them, including their house, have less than £80,000. Now, I don't know about you, but 80 grand, in my mind, is not an awful lot of cash. 80 grand is not
total net worth when you're,
yeah, especially if you lose your job, which is going to be one of the things that is going to be absolutely the signature of this in X months' time, and that's not too distant future. When companies start tightening their belts and laying people off in large numbers, those savings disappear, because Kezia is right to the degree that people will spend their redundancy money to maintain the lifestyle they have, rather than reining themselves in and eking that redundancy money out over a longer period of time, because they will fool themselves into believing that they will be able to get another job. And it's only when another job does not materialize and they're still spending at the rate that they used to when they had a job that they realize quite how fucked they are.
Yeah. Well, nobody wants to know how fucked they are.
Oh, Kezia, sorry. Kezia's just said, I live in Chelsea, so I might be in a bit of a bubble.
Yeah.
I love you, girl. Love you. If you're in Chelsea, it could be a large bubble.
Hang on a second. So I have observed this human phenomenon, which is when people's lives are running into trouble, nobody really wants to confront it. Very few people confront the brutality of what's happening until it punches them in the face in one way or another.
Yeah.
And so that's why I think maybe Kezia's got this impression that actually everything's going to carry on as fine. But this comment on the screen right now. So with human to human respect, Kezia, this is such a load of bollocks, right? When you put words like facts at the end, house prices won't go down, sadly. They already have, and they already are, and there's verifiable government data to show that's the case. So first of all, that is literally a factually incorrect statement that you've made. Banks still lending so generously. Alex, would you like to correct her on that, shall I?
No, you go for it. You're doing a good job so far.
The banks are not. This is the whole point. They're not lending. You're not putting numbers on this, right? House prices won't go down. House prices have gone down and will continue to go down further. And there's data to support that, right? And if you want to look at the trends that show what's happening, we've explained it. Alex and I have done it in the video called "How to Work Out What House Prices are Doing Without using the News." Okay, and there is this very strong correlation between wage growth and house prices. That's fact. Go look at that over the last 27 years. Okay, and we're now in negative wage growth. So banks still lending so generously. What? Which banks? This is rubbish. Because interest rates have gone up, they are tightening their lending criteria. Affordability has gone down, and the amount being lent on someone's income because interest rates have gone up has dropped by about 30% for ordinary sort of average. Yeah.
Let's and sorry to interrupt, but just as a certain bunch of people, lots of different people from many different backgrounds.
I do.
But Kezia may know a lot of people who come from Chelsea and live in Chelsea. And as we know, bank managers do have a predilection for going, oh, let me listen to that accent. Oh, let me look at that last year's bonus. Oh, you'll be all right. I'll keep lending to you. But I promise you, Kezia, if you lived in Hull and your background was working in a shop, banks are not going to be turning to you and saying, oh, yes, and you didn't pay your mobile phone bill for 3 months last year because of the cost of living crisis. They are not going to be saying to you, look, have a couple of £100,000 so you can get the mortgage on the place you want.
Exactly. And actually, I talk to mortgage brokers all the time as well. Because I don't know where you get this impression from. I mean, you're making these statements like you have some information, but you're not saying where it comes from. And I want to address, again, the last point here. Like I said, there's no correlation between immigration and house prices, right? No, there's no provable correlation. I mean, yes, it creates more demand for housing, okay, but that's not the same as house prices. And then your last sentence here, like I said, the government will not permit a correction. I mean, it's laughable that you think they have that much power. Okay, there are certain circumstances when they simply can't stop it. And this is one of them. They couldn't, if they wanted to stop it, they could slow it. There's certain things they can do that would have some impact, yes, but there's a very, very long time delay. So if they pulled a rabbit out of the hat tomorrow on house prices, you wouldn't see the effect of that for about another year actually coming through to house prices. And so the government doesn't decide what happens to house prices, right? They can have policies that affect it, but to say the government will not permit a correction implies that they have control over it. They can influence it, yes, and with some of their policies they can influence it, but they can't stop it if it's going down. They can't, because to stop prices going down, they would have to force people to buy. That's the only way you'd stop prices going down, right? How would you stop prices going down without forcing people to buy? Unless you actually take over the market and stop it being a free market. So I'm picking on your comment here because this is the kind of guff I see from people that's unsubstantiated and dangerous. Now, you've gone on to say, thank you very much. It's nice to have this comment. I want you to be right, Charlie. Well, you then good for you, right? Lucky. You're lucky because I think you're going to find that we are. Okay, okay, right. That's enough, Kezia. Right, on to other people. Thank you. They're not going to have any opinion. That's true. Kezia is whining.
Sorry, David McKenzie. Kezia is Russell Q in drag. That's harsh, but I love it.
Yeah. Okay. Kezia's winding me up. You're right. I think you are just winding me up, Kezia. Okay. Jimmy Davis says, didn't Bloomberg recently say that real wages have risen? No. They said that wages have risen. I don't think they said real wages have risen.
Correct.
They would be wrong if they said that.
They would be.
But Bloomberg is guilty of some guff. Bloomberg's story on the RACS report was, oh, the worst is over, the end is in sight, and it's all going to be better. Which I don't know what very, very flimsy straw they clutched at in the report to be able to say that. I didn't actually read the whole article. So you've got to watch Bloomberg. They will occasionally be guilty of spinning guff. We are one watcher away from 700 live viewers. That's a record, I think.
Jesus.
I know. It's because it's your birthday, Alex.
Yay, happy birthday to me.
So a question from earlier that I saw was, what's Alex's prediction for interest rates by the end of this year?
Oh, Christ. It all depends on what happens with inflation. If it does drop away, then sure, Bank of England will reduce. But I do not think lots of people are saying, oh, they'll go straight back to zero interest rate policy. No, I honestly don't think they're going to go, my view, below 3.5. I think they've realized that it didn't work. None of that worked. All of that time of 14 odd years of 0.5% average rates was a waste of fucking time. And has allowed the debt bubble to get even fucking bigger. So I would say that absolute minimum would be 3.5%, but more likely 4%. However, that's if inflation does drop off a cliff, which is what will happen when it does. It won't be a slow decline. But if we haven't got to that point yet, if for whatever reason we have another energy crisis, whatever it may be, then we could easily still have 5% rates at the end of the year. I don't think that they'll be higher than 5% at this point. But if I had to guess, I would say a minimum of 4. My view could be 3.5, but a minimum of 4, up to 6 if things were to go badly wrong.
Up to 6.
But certainly not 0 or 1 or 2. They're not going to cut it back like that. I can't. Well, I say that. They stood there today and told us that there wasn't going to be a recession. We're going to have GDP growth. What the hell do I know what they will do? But it doesn't make sense for them to cut them.
No. I mean, do you think they'll reduce rates before inflation has? I mean,
no. They got so scared by what happened in the 80s when they did exactly that, and inflation came back even harder and caused the crash in the 90s, 91. They won't make that mistake. That's why they're continuing. That's why, even though they're saying that inflation will be down to 7 to 8% for this month, they still put in their statement that they would be going to 4.75%. They will not stop until inflation is markedly down.
Yeah. And they don't think it's going to come back up, because that
exactly.
That's the nightmare, isn't it?
Yeah, and there are still just about people old enough to remember what happened in the 80s.
Yeah, Steve Maxwell's comment here. You've read a comment along the lines of, an economy cannot function with rates lower than 5% as it encourages too much malinvestment bubbles. You've said something similar, haven't you?
For this country, I think the ideal rate is actually 4%. Somewhere between 3.75 and 4.25. If you look historically, we operated at 3.9% for over 100 years. We've got a different set of circumstances now, obviously, and there's a vast amount of debt to deal with and a whole range of other things. But 3.75 to 4.25 seems a reasonable rate that encourages savers and allows investment, but stops speculators.
Right. And it's got to be attractive to savers. So in other words, it's got to be enough above inflation to make it worth actually.
Exactly.
Yeah.
Otherwise, what's the point in having any? Well, and that's the problem, is that we're now in a situation where the government doesn't want us to have any savings. They just want us to spend every penny we've got to keep the economy going.
Yeah. And Monkey Tennis, so there's a comment on there, Monk's Whiskers. My parents lost their house in the 80s crash and it cost them their marriage. I'm really sorry to hear that. But yeah, this is the point. Thank you for your comment, because it's not about money, is it? This is my fucking point. And this is why I get so frustrated at people who go, oh, negative equity doesn't matter. I mean, I honestly think that displays dangerous lack of financial understanding, and you hear it from independent financial advisors. Obviously, they're biased and they want to be. It doesn't suit them to say watch out for negative equity, because they've got to keep their deals going, and I get that. But if you are someone that cares about your customers and their lives, you've got to remember that it's not just the money that gets affected; it's people's lives. Actually, this is a question I've been meaning to ask you a long time. Monkey Tennis says we need rate to go higher than inflation. Some people have said that the actual interest rate's got to be higher than inflation until inflation comes down. I've got no idea if there's any basis in that at all. Do you have?
No, that's not true. Let me just get.
Okay. Yeah, Chris says interest rates had to go to 12% in the early 90s to control inflation at 9%.
They did, but in the 70s, interest rates only went to 12% to control inflation at 22%.
Right.
So
we've got a very generously paid question here. Super chat. So, in a crisis situation, what would stop the Bank of England or private banks on their behalf buying property directly to maintain prices? Okay, so I think what that means is a crisis situation, as in the market's in free fall, like proper total asset collapse.
Mm-hmm.
What would stop the Bank of England buying property directly to maintain prices, or private banks on their behalf?
Nothing that I'm aware of. I mean, there may be some legalities, but we've already discussed many times the idea that large institutional investors will become private landlords. And Lloyd's have said that they want to become the largest private landlord in the UK. I mean, if they were supported by the Bank of England in terms of if they were backed so that they were taking no risk, I'm sure banks would be quite happy to load up a portfolio so that they retained their relevance when CBDCs come in. We'd need to see, but yes, I think it is feasible. I don't think it's likely that the Bank of England would start to, or I hope that neither the government nor the Bank of England would start to back banks purchasing houses.
Right. I mean, even if they did, they wouldn't want to. They wouldn't want to catch it on the way down, would they?
Well, that's the thing. If you're Lloyd's and you already own the mortgage on that house, let's face it, what difference does it make? You can make a reasonable purchase, better than a repossession offer, but so that, the owners don't complain too much and have to then rent it back from you.
Nick Jones asks, is this worse than 2008? My answer to that is not yet. And I agree. It's Eddie Ward says it's a continuation of 2008, but I think it's going to be worse when this is finished playing out. I think it's going to be worse, but not yet. And the other comment it's reminded me I wanted to make is that in all previous downturns, there was blanket refusal and denial in the financial sector that it was going to happen. Like it's amazing how the denial is so baked in. And until it has happened, it's no one thinks it's going to happen. I mean, there are actually a lot of very high-profile global investors saying it is going to happen. Exactly when, exactly how, we don't know, but it is. Somebody saying it's already begun happening. And I think I worry. I genuinely worry. I think it's bad news for the economy. I think it's bad news for people's jobs, bad news for quality of life. And as a father of 3 kids, and as you know, Alex, a real optimist, right? I'm a proper optimist, and a positive, cheerful, optimistic guy. But I need a basis for that optimism. It can't be pure unicorns and rainbows. Everything's going to be fine because I watched Disney movies growing up. I genuinely worry about what you say, about CBDCs coming in, about the standard of living and opportunity and everything else, and about this horrific concept of 15-minute ghettos, as I think one called today. It genuinely worries me. If there's any chance of that coming in at all, the fact it's even being discussed worries me. But I worry. I fear when you say things like we're heading towards death in poverty and a massive degradation of people's quality of life, living standards, finances. A very small number of very rich people, and everyone else is much poorer. It's not good. It's not good.
No.
How far? Okay, we're over now. My goodness me. And it's your birthday, and you probably want to drink a lot more. Don't let us hold you back.
Let me just answer one question for Paddy. Paddy, I am not saying that historically interest rates have not been above inflation. In fact, it's one of the big things we went through on previous thing. I was explaining that actually the last 14 years where interest rates have been substantially lower than inflation have been one of the reasons that we've got such low GDP and low investment, and it's been such a terrible time. Interest rates should always be above inflation. All I'm saying is that through the 70s, through 73, the OPEC piece, actually inflation came down dramatically with lower interest rates, and that's happened before. It happened in the 50s, and we're in a different situation now. I am of the view that interest rates will get to 5%. Always have been, because the idea that inflation was going to get crushed at 3% or 4% didn't make any sense to me. But I'm not sure that, given the situation we're in now, we have to get to 10% in order to bring the inflation rate down.
Right. Yeah. I agree. I think that's probably right. I think there will be a natural slight reduction in interest rates back down to. I think it's going to get really sticky at around about 6 or 7%.
Well, again, there was another one of your viewers was saying this earlier, that they thought that inflation rates would plateau. That's inflation very rarely sits flat at any rate above 4%.
Okay.
It's either all the way up or it's all the way down. It will peak and trough, but really inflation only ever plateaus because of balance at somewhere between 2 and 4%. So I do see it coming down fast and hard, and I think it'll get way below 4% and 2%. And as we go into recession, we may actually hit a deflationary period. It's not unthinkable.
Right. Okay. Well, listen. Unless we've got any more questions, someone says, "What's your tipple, Stig?"
Artos Lacas, a Corbière.
Okay, there you are. You got your answer.
It is a gold medal winner, according to the side of the bottle. I don't know. It seems to go down okay. So, fuck it. Oh, it's 14% alcohol. That probably explains it.
Nikki Nike says 4.5% base rate, I assume, is pissing in the wind. Yeah, might be. Yeah, there are people that can message.
I think they'll be surprised when it starts to come down. But, we'll see.
Yeah. Well, I mean, deflation, if deflation does happen.
Oh, then we're fucked. Deflation is horrible. I would say worse than inflation.
Really?
Yeah. I mean, the only thing worse than that is hyperinflation. I mean, every option we're discussing here, not one of them is, oh, yes, a nice steady growth rate, maybe 2%. That would be good.
Yeah. When was the last time we had growth above 2%?
Before 2000.
So we haven't had GDP growing above 2% for over 20 years.
No, if you include the drop, so from 1955 until 2001, per capita GDP growth was 2.4% per year. From 2001 to 2019, it was 1% per year. But once you include the COVID crash, from 2001 to 2022, GDP growth per capita has been 0.7%. And bear in mind, that's the GDP with all the house price imputed rent in it.
Right. Yeah. How likely is hyperinflation, says Aaron?
There's no way we're going to be paying people above inflation like we did in the 70s. And therefore, I think the chances of us chasing inflation up are very, very small.
Yeah.
We'll just get poorer rather than the trade unions back in the 70s who got a 29% pay increase that year.
Right. Right, guys. Well, I like to leave you wanting more. So I think it's time to wrap it up. It's been a fun one. And I would like to recap with this, right? If you are thinking about buying a home and wanting to buy a home, first of all, there's no decision to make until you've had an offer accepted. Okay? Shall I buy now or shall I rent? Well, have you found somewhere you want to buy? Can you afford it? Have you got a mortgage in principle? Just remember that. If you're seriously considering moving, the real decision doesn't come until you have an offer actually accepted. Make your offer, get it accepted, and then you'll be like, oh, I've had an offer accepted. Now I have to actually decide if I want to go through with this or not. And a lot of people, I think, waste a lot of time imagining that they have that decision to make. Oh, I can't decide to buy or rent. Until you found a place that you can afford, that you want to live in, where the offer's accepted, it's a what's the word? It's a provisional decision you're making, right? And it's the same if you're a seller. Oh, I'm not sure if to sell or not. Well, you don't actually have the decision to make until you've had an offer on your house, right? If you're thinking of selling, if you're even thinking of selling, put it on the market, because until you've had an offer, you won't know whether you can sell it and what you can sell it for. It's me, says, hang on. Fuck, don't go. I'm left with question time now.
I'm very sorry, but I'm going to go and get very, very drunk.
Well, Night Nurse has 18% apparently, according to Lord of the Flings.
Jesus. I shall have a bottle of that before I go to bed.
Right, guys. No, Paul, listen. I am not suggesting that you go around making offers and then decide if you want to buy. That's not what I meant, right? What I mean is, don't agonize over a decision that you don't yet have. That's what I'm trying to point out. Okay. I'm not saying just, hey, wander around and just make offers and then go, oh, actually, do we want to buy? That's not going to happen in real life anyway, because actually getting viewings booked, going to see them is a very time consuming hassle to go through. It's not an easy thing to do, just to like do on a whim. Okay. So please don't think that my advice is, hey, don't just go out and view, because any decent agent worth their salt will qualify you anyway and won't show you properties unless they actually think you're serious about buying.
Oh,
but the point I'm making is, don't agonize over buying or not buying. Like because if you think you want to buy, then go out and look, because only by looking and viewing will you actually be able to reach a decision. That's the point I'm trying to make, right? I'm not saying go out and make flaky offers that you don't mean. That's not what I'm saying. But what I am saying is don't agonize over a decision that you don't actually have to make yet.
One quick one, Charlie.
Yeah, go for it.
I can see that Eddie and Patricia are discussing the potential for a third world war. And it just takes me back to the Dead Kennedys, my favorite album, Give Me Convenience or Give Me Death. If you listen to the lyrics of Holiday in Cambodia, it's all about the State Department calling Maggie Thatcher to tell her that they're worried their economy is not doing well. And so they want to start the war machine, get the bomb factories producing so that they can boost the economy. And it's okay because they'll kill off lots of those young people who are on universal credit. And that's going to keep the economy going perfectly. And if anyone complains, just boost the drug supply to the country. They won't even notice when you start building germ bombs again.
Jesus. Well, on that happy note. On that happy note, have a great one, everyone. Thank you very much for your time. Thanks for your fantastic comments and questions tonight. I hope it's been useful. Lots more soon. Talk to you soon. Lots of love and luck.
Bye-bye,
Bye
guys.
now.
Have a good
Don't
one.
overpay. And see you soon. Thanks, guys. Bye-bye.
Bye-bye.